Hi, everyone. I'm Janelle with TaxExact, and I'm joined today by Pat with TaxExact. And we wanted to take just a couple of minutes and share with you some awesome updates we've had to the software. Especially for the 2020 tax season, we feel pretty good about the fact that we've been able to turn things around fairly quickly, given the changes in legislation that we're all pretty familiar with. So I'm going to turn it over to Pat, and he's going to walk you through the changes that we've made and the updates that we've made to the software. And going forward, as we have changes and updates, we'll continue to do these video updates so you can see for yourself what's changed. All right. So Pat, I'll let you
Awesome.
take it from here.
Thanks, Janelle. Appreciate that. Yeah, I'm just going to share my screen with you guys and kind of go through some of these updates. It's been a blessing to have the opportunity to continue to work and develop this thing as tax season has unraveled. And I hope you guys are all doing well and that tax season is treating you well. So with that, I'm going to take the screen and sign in here. It would help to know where my screen monitor video. Where'd you go? There we go. Sorry, whatever happened there, my mouse went missing. So when you get into creating a new project nowadays, you're going to find a new change here at the window when you go to create a project. So I'm going to just start by adding the year and the client, which all of those three first questions were normally part of the process from the prior design. But I would say a couple weeks ago, we actually updated this to incorporate a few additional items for you guys to select from. Status being one of them, because we found that people might start a project and almost immediately put it into progress. Another thing is the assign to. So this is for your team to assign it to someone if it's known as to who they should assign it to. If maybe it's an administrator making this project and creating it in TaxExact and then pushing it to the person it needs to be created by. I'm sorry. Yeah, the instance needs to be created by. Other times, like in our case, we're going in and we're just literally putting it into progress and assigning it to ourselves. And then it immediately hits our list. So if I were to go out here right now, Amy Jones, I just created, put her in progress. She's now on my list. So that's been a bit of a feature add since last time because we used to have to reassign them to ourselves or they sit in limbo unassigned. So I hope that helps. Another thing you're going to see immediately is how we shifted the header up here on the top. Now you can see that we actually have this new section called project information. This is going to allow you to see what type of project return it is, what year it is, which used to be up top, but you couldn't have seen prior in the old version what status it was in or who it was assigned to. In addition to that, you had to go up to the review history to see any sort of notes. So in this case, when you say reassign it, I'm gonna actually reassign it to myself and show you what would happen here. Change status is optional. I'm just going to say testing 1 2. So what's neat about this is now I'm going to go back to this return here, and if there's notes here, they show right here the latest note. This is going to pull from the latest note from the current step it's in and allow you, if you want to see more details, if it may go more to the note is larger than that window, you just click more and it'll take you right here. So it's actually right in your face when there's a note from your staff relative to this project, which is also neat. You can also go here to change the status. So for instance, if this isn't in progress, but I realize I'm not going to be able to get to it right now, I can actually change it back to not started. Now I'm going to save, go back to the project view for my documents, and it's back to not started. You can also go right here, and in this window, you can reassign or edit the status. So I can, again, put my name, put it back to in progress, and make notes if I need to. So back in progress. A little more seamless than the first design view. A couple updates too, outside of this. In this case, we've actually switched gears here. We used to have refundable credits in the payments tab because that actually is how the 1040 is designed. That's why we had it there. Now we've done it is actually created a spot under the credits tab to make it more user friendly and user, I guess, clear to put refundable in the same section as the non-refundable. So we split these out. And in that case, we've also made it so that you guys can, play around with the information relative to the recovery rebate credit. So this goes right into the recovery rebate credit section. So right now for a person in this case, let's go back to the summary and look at this person's information. Amy is single. Well, I say single. She's a mom because she's head of household and she's got one dependent. So on the first stimulus payment, she should have gotten $1,200 and another $500. That's $1,700 plus second round. She should have got 600 for her and 600 for her dependent, which is 2,900. Okay. When you go to the credits section, we have the system in the background calculate the automatic recovery rebate credit for them. But what she should have told you, if you asked the right questions, is she should have told you that she got 1,200 from this credit and 1,700 from this first round. Doing so would eliminate this credit completely. Maybe in this case, she actually didn't get anything. So it should automatically convert to a $1,200 remaining credit that's refundable. It's going to carry over to the summary window. You guys, again, might have already noticed this. This would allow Amy to get a refund of $1,200. So that's something that we wanted to point out. Another thing to point out is right here on the income tab, another big thing from COVID is a 1099-R with a COVID distribution. You're just going to select this 1099-R regular, okay? Now, again, we have a couple of 1099-R types. So if I just type in 1099-R, you got a few versions where the state is exempt for income tax purposes. That's like a pension employee from New York, for example. Their state pension is entirely exempt. Penalty, this is intentional because it calculates the penalty, early withdrawal penalty, and taxes the entire amount plus the 10% penalty. This is really more for those that are retired or over 59 and a half or have an exception to the rule where they're not going to have a penalty. So in this case, that's what we're going to have you do for COVID. I'm just going to say COVID retirement, right? If I could spell. And then you're going to put, say the taxable amount, let's do an even number. Let's do $30,000, right? Now, I don't know about you guys, but my software automatically splits that amount into thirds. So in this case, that 30 grand is taxable. Down here, you have a section called 1099-R coronavirus distribution. So qualified coronavirus distribution, if it is marked yes, now it tells the software that it's automatically going to elect the 3-year election, which is what most softwares are doing. But if you are wanting to have the client pay the tax on that whole amount in the first year, when it says elect not to average over 3 years, you're going to say yes. Elect not to average, okay? So right now what I'm going to do is I'm going to show you, I'm going to put 10% on this guy, which would be 3 grand and 1,500. And I'm going to say add that income, and I'm going to go to the summary and show you that saying yes puts the full 30 and taxes it. But go back there and you actually say it's coronavirus and you say no. Now you're telling the system to take 1/3 of that, which brings this to 10 grand. So that's important to note because that's a feature that's going to be beneficial to your staff and your clients. The next thing is on the FFCRA, Federal and Family First Coronavirus Act, a Coronavirus Relief Act. I'm going to go to a Schedule C because that's how this is applicable, FFCRA, just for fun. Sole proprietor, which by the way, after a couple days ago, legislation just passed a rule for sole proprietors where instead of the PPP being for sole proprietors on the net income, so if they only netted 10 grand, the government said that they could take 10 grand divided by 12 times 2.5. So they could get a $2,083 PPP loan, which is crazy. Because isn't the PPP to cover draws and to cover overhead, rental and utilities and all that? So what they've done as of a few years ago, again, today is February 26th. So a few days ago, they said that if you have a Schedule C, you could be eligible for up to $20,000 of PPP money or whatever 1/12 times 2.5 months of your gross revenue is. So if they grossed 50 but only netted 10, now they could take 50 divided by 12 and times it by 2.5. Now their PPP loan went from $2,083 to $10,416. This is so fresh that banks don't even know how to actually go back and fix this for those Schedule C filers where they only gave them the net income number. So remember that for your sole proprietors. Even if you're a sole proprietor, remember that. So anyways, going back to this, I'm going to just put in here, let's just pretend this gross sales number is representative of the net income. We'll put 30 grand in there. So the way that the FFCRA works is it takes your net income, divides it by 260 days, and then multiplies that by the number of days you were impacted by COVID because you either had to quarantine for yourself or for someone else that you care for in your household. The max you can say you were out was 10 days. That means that this client should get upwards of $483. So when you go to the credit section and you go to the refundable credit section, you have to obviously connect this to the person that's self-employed in this case. So this person said they were out the full 10 days. Sorry, they were out. Yeah, they were out 10 days. That's fine. So I must have calculated it wrong on my end, which is fine. Oh, I did it wrong because I did 620. So 30,000 divided by 260. 260 is the total number of working days, Monday through Friday, times 52 weeks. So that times 10 should be $1,053. But I think the reason that mine's off is because you have to take 92.35%. So you have to take 30 grand times 0.9235 actually, divided by 260 times 10. So that's actually how it's calculated. So it's going to allow you to put that information right here, and it's going to calculate the max. Now, again, if I put 15 days, it's still going to max it at 1070 because the max is 10 days. So just keep that in mind. That's another benefit for you as you're going through this. So that instead of doing it automatically, instead of doing it manually, we're allowing the software to do the work for you, which is also to take away from some of the work. So in a nutshell, that's a majority of the updates. The only other thing I'm going to present is this. The deductions, you guys have heard about the $300 max deduction here. So what you would do is you would put your information here for the 100% limitation. You put $500 here. Their max deduction is $300 this year, even if they're married filing joint. What you do here is you just put and this says deduct cash contribution if taking standard deduction. Say yes. Now what it's going to do is it's going to automatically put $300 in your adjustments right here. So if you notice, there's no input for that row. Your charitable contribution, it's going to automatically take you back there. But long and short of it, it's in your adjustments. It's $300, and at the end of the day, it shows up there. Now on the states, most, if not all states, are non-compliant with this $300 deduction. So what they've done is they've created this rule where they call it a recomputed federal adjusted gross income number. What it's doing is it's taking your federal AGI and it's adding that $300 back to it. That way you can use it and know what it is for the state. So keep that in mind as it stands, and know that that's going to be how states are adjusting for if they're not non-compliant, non-conforming is the right word in this case. So with that being said, Janelle, those are the biggest things that we wanted to share today. There's a lot of other really good things going on in the background that are bigger process development opportunities that we're still working through. But we're really excited to continue to roll out new changes, and we'll continue to send you more updates as they come. With that being said, I hope you guys have a wonderful weekend, and I'm going to stop sharing my screen now. And we'll be hearing from you soon, hopefully. And again, let us know, Jim, myself, Janelle, whatever you need, let us know. We'll be able to help.
Thanks so much, Pat. And while we're at it, I just want to make sure everyone knows to go out and subscribe to our YouTube channel and follow us on Twitter at TaxExact1, and also follow us on Facebook. Until next time, we wish you the best success, and thank you very much for your time.